Hey everyone, it's Scott Poland here with Chestnut Park. I wanted to talk today about the 10 steps you need to take in order to purchase your first home. I'm going to try to summarize this for you and make it as accessible as possible. I'm going to include some links as well that will help you along the way. So first step, evaluate your financial situation. Now, what I mean by that is your lender is going to look at your debt to income ratio. So you have to start by doing that. Look at your credit card debt, your car loans, your student debts, things like that, because the lender wants to know how you're going to service that debt based on your income. Now, add a mortgage payment. So if you're currently paying rent or you're living at your parents' house, you can pretend to pay rent and take that money out of your account in order to get prepared, and maybe it goes into another savings account. But what I mean by that is figure out what you think your home that you're going to buy is worth. Determine what the mortgage payment is. Add that mortgage payment up with utilities. So budget $300 to $500 a month for utilities. Property tax. So that's typically between 1.1% to 1.3% of the assessed value of a home. So if you're looking at a $700,000 home, the assessed value might be $450,000. So 1.2% of that 450, you're probably around the $5,000 a year for property tax. So calculate that in on a monthly basis. So then you can look at what this is actually going to cost you to own a home and not be house poor, because that's the last thing anyone wants, is to be house poor. So look at all that, determine what that would look like for your financial situation, and then start to plan to save for your down payment. Now, to save for your down payment, there's a couple different programs actually out there for government programs. You can deal with the home buyers plan or the first home savings account. And both of these are very, very helpful for some home buyers, of course. And it is a fantastic way to save a down payment quicker. So you can access your RRSPs. You may have those through your current work situation. Maybe you don't even have RSPs yet. So this is maybe a conversation you need to start having with a financial advisor as well as a mortgage broker, because you can also do RRSP loans. So what that does is you take out the loan, you put the money in an RSP, it actually brings your income down, you pay less tax, there's a tax credit, things like that. But the issue with that is when your lender goes to look at your debt service ratio, that loan will be there. So this is why I'm suggesting it's a bigger conversation with a professional, either a mortgage agent or a financial advisor or both, to determine if that would work for you. Another way is to just go through your finances, go through your debit card, your credit cards, and look to see if there's any payments that are like subscriptions, like things that are coming out monthly. Can you cut those out of your life currently? Maybe for the short term. Look at where you spend your money. I know everyone out there can look at these numbers and determine where they could cut some costs, because everyone has daily spending that they could probably get rid of. And if you add that up over a course of a year, it might shock you as to how much money that adds up to. So now that you got your budget figured out, you understand what kind of monthly payment you can manage in order to be a homeowner, you need to then get pre-approved. So you want to go to a mortgage agent that's going to do a pre-approval. So what I mean by that is they should be asking you for proof of down payment, tax returns, pay stubs, bank statements, things like that. They need to know and understand everything about your finances in order to give you an accurate value of what you can afford. Okay, so they may overshoot that. They might say, you know what, you can afford up to a $700,000 purchase. But if you've already crunched your numbers and $600,000 is a much more comfortable number because you have a certain lifestyle you want to keep up with, you have friends getting married down south, you have a baby on the way, whatever the situation may be, but you need to manage that monthly budget. But the lender will typically offer you a slightly higher than what you probably have budgeted for. And I would highly suggest you try to stay within that budget because, again, like I said before, you do not want to be house poor. There's lots to do. The default, I think, for everybody is looking at interest rate when it comes to a mortgage. I don't suggest solely looking at that because there's a lot of mortgage products out there and everyone's situation is slightly different. So I would strongly suggest going to a broker. And why I'm suggesting a broker is because they take your situation and then shop you around to all the different lenders, all the different banks, and then they find the product that works best for you. So that's why I'm suggesting. Obviously, when you go to a bank, they have their products and only their products. They are not going to shop you to another lender, even though there might be another program at a different lender that suits you best. So I highly suggest the mortgage broker. If you need someone, just reach out to our team. We're happy to connect you. There are some additional costs that you have to budget for when purchasing a home. So you are possibly going to have a home inspection. There's going to be title insurance. There's legal fees. Then you also just have to have a miscellaneous account. And what I mean by that is you could be 2 weeks into your new home. It's not a brand new home. The appliances aren't brand new and the dishwasher cacks out. So you need a little bit of a slush fund because now you're a homeowner, and being a homeowner comes with pretty consistent expenses, surprises every once in a while. I'm not trying to scare you, but I just want to be realistic with you. Your financial situation will definitely improve owning real estate for sure, but there are some little hidden costs every once in a while. Especially with your first home, you got to buy all the stuff. You got to buy the garden tools and the hoses and the wheelbarrows, and you got to do all that, and you got to furnish your home. So there's some expenses that you got to make sure you have a little bit of a slush fund set aside. You are likely going to use a real estate agent to find your first home. I know lots of people start out looking on their own, and it sounds like it's a pretty painful process. So what you need to do is find an agent that you connect with, that you trust, that you enjoy spending time with them, because you're likely going to spend a decent amount of time either on the phone, through text, or obviously many showings. You need to feel comfortable with that agent. You got to make sure you can interview agents, just so you know. Don't feel like you just have to pick the first agent that you meet at the open house. You certainly do not. You can interview agents and determine what is the best suit for you. And typically when you sit down with an agent through an interview, you're going to know fairly quickly if this is a person that you connect with. Obviously, our team would love the opportunity, but not all personalities connect. So you need to find someone that suits you and your situation and your family. So you found your agent, you're pre-approved. Now we're going to start the search process. Every agent has the ability to set you up on a search, and that search is typically automated. So once a home hits that criteria, it fires you an email that suits you. Obviously, we agents in the background can tweak your criteria and make changes to minimize the amount of homes that you see if they're outside that criteria. So any of the feedback to your agent is critical. But when you're searching for the home, I want you to think not just your current situation. I need you to think 3, 5, 10 years down the road. So, and what I mean by that is we have dealt with many families, and maybe the kids are 3 and 5 years old, and we go into a home and everything's perfect, but there's one living space. And at the time, it's not a big deal because your kids are young. You want to see them. You want to make sure you know where they are at all times. But the question I'm going to ask you is, where can we create a second living space, or where can the kids go when they're teenagers? Because quite frankly, they don't want to be around you, and you might not want to be around them at that moment. So you need that second living space. So these are the situations that we're going to talk through, and we're going to try to figure out where you're going to be 3 to 5 years down the road. It also, when it's a couple, they're planning to have kids, but they're not pregnant yet, or they do not have a child yet. Are we looking at 2 bedrooms? Are we looking at 3 bedrooms? Things like that. Where's that kid going to sleep? Is it just a 2 bedroom? Do you want to have multiple kids? So these are the conversations that we're going to have with our buyers. And then we also have the families that have a 1-year-old and they're not thinking schools because this is not in their world quite yet. So these are the questions I'm going to ask you. I'm going to ask, do you have a preference of a school? Because that's going to change the location of your home typically. So you've been out, you're viewing lots of houses, you're really narrowed it down to what you like, and then you find the house that you love. You want to make an offer. In the perfect scenario, you get to go in with financing condition, home inspection condition. If it's a condo, we do condo docs. We make a conditional status certificate, things like that. So we as agents are going to recommend that you do these conditions. But I'm also going to give you the pros and cons if we're in a competing situation. What happens when you have too many conditions? Having your financing in order is huge, because we could still go in with a finance condition, but it might not be a week long. It could only be 2 days, 3 days, depending on what your mortgage broker suggests. And then a home inspection condition, if we know we're going into a competing situation, maybe we do an inspection ahead of time. Yes, there's risk with that. You're going to spend $500 to $600 and you may not win that bid. But at least you've done that home inspection condition. We can go in with a very clean offer with no conditions because you've dealt with your mortgage agent and you've dealt with home inspection prior to offer date. So there are ways to still make sure you're protected, but also make you competitive. And that's our job as agent to explain that whole situation. So you've got the home, the mortgage is secured, you're ready to go. We're going to send all your paperwork to your mortgage broker. They're going to do the final underwriting. They're going to make sure leading up to closing that the lawyer has all the details with the mortgage. One suggestion, I think every mortgage broker probably says this, is do not go out and lease a car prior to closing, because when they do the final finance check, they are looking to see if there's any additional loans that have came into play. So that could really, really crush your home buyer dream if you go out and lease a vehicle, or you started some payment that you can't get out of. So then you're going to meet a lawyer prior to closing. Generally, the week before closing, you're going to go see the lawyer. You're going to walk through all the paperwork. They're in charge of making sure your title's clean, making sure there's no liens or encumbrances on that title. And they're the ones that are registering the mortgage to title, as well as you as the homeowner of that next home. So we, again, can connect you with great lawyers in the area that can help out. So these are the 10 steps that you are going to work your way through in order to buy your first home. If you have any questions whatsoever, reach out to our team. We're happy to talk about this whole process. You can book a 15-minute discovery call if you want, so we can understand your situation and give you any advice that you need. I will include several links below to a bunch of the information that I shared, and that'll summarize some of the stuff that you need to go back to just to remember that you do. If you have any questions whatsoever, reach out to our team. Thanks.